this is not GM in the bailout. The government took equity. The banks. Anybody remember Solyndra?
Sure.
Okay, what I'm trying to say is that it doesn't. Those are different scenarios, Dan. But at the same time, it doesn't guarantee the success of a company.
Let's separate a couple things here, okay? This is a bailout for all intents and purposes. This company's going in the wrong direction. I think we can all look back through our careers and say there's plenty of strategically important companies in this, the history of this country that we bailed out. Fine. When you talk about a sovereign wealth fund, sovereigns invest in things that they expect to do really well. If you look at some of the largest holdings of the sovereign wealth funds that exist, Norge Bank's one of them. Obviously, the Saudis have a big one. Guy just mentioned the Swiss. They are investing in growth situations. This is not that, right? So when you think about that, it's not a sovereign wealth situation. I'd take you over to China and I'd think of state-owned enterprises that are strategically important. So 50 or 60% of the Chinese stock market, okay, in market cap terms, are SOEs, all right? So this is really what this looks like more. And then there's a certain sense of irony here. If your government owns a stake in the company, that means that you're going to have a level of regulatory oversight that might not exist in a company that doesn't have a stake. And this administration is meant to be the hands-off regulatory, from that standpoint. So I just think there's a lot of things going on. It is a slippery slope. I wouldn't think of it as something sort of a sovereign wealth fund where you're investing in the best companies because you want a big return.
But Guy Adami, it's also popped the stock. Intel's up 24%. And let's put up a chart of MP, right? MP Materials. The MP, by the way, stands for Mountain Pass. I've been to the mine twice. The Department of Defense, soon to be renamed the Department of War, has a 50% stake in that company now. And guess what? You can hate it, but stockholders have minted money.
And that's what we're tasked to do here, to figure out what it means for the stock. And listen, I will say that a year and a half ago on this desk, we talked about the importance of Intel and how it should be some sort of homeland security play. By the way, the stock was probably in the mid-30s at the time, so that might have been the right idea in terms of the stock market. It was the absolute wrong thing to do. But I do think, this is just me, I do think there's this floor in the stock in terms of Intel. Now, playing it forward, or now
would you have bought debt instead of equity if you were the U.S. government? If they said, Guy Adami,
I don't know where the Intel,
why are they buying stock? Why not buy debt?
I can't speak to where Intel debt was trading. I mean, if it was trading at some depressed level, I'd say yes. If they made the assessment that the stock is more attractive than debt, I mean, I can't speak to that. But I understand what you're saying, and hopefully they'll have those conversations. But I think, at least for the short term, the Intel bottoms in. And I think on nothing other than these types of headlines, this could be a $32 stock, a level we saw a year and a half ago.
Guy, I would tend to agree in the tactical sense. I mean, I think one of the best things going for the stock is everyone to a person hates it. There are 52 analysts that cover it. There's only 4 buys on the name. It certainly seems like 24.25 has shown up as some type of tactical floor. Where can it go? 30, 31, 32. But don't forget the longer-term picture. This remains a absolute long-term bear market. I think 32, best case here. This stock peaked 5 years ago. It's down 75%.
Chris, all those things are exactly correct.
Yeah.
But now, remember, you ever see the movie Goodfellas?
Yeah, of course.
Right? Remember when they bought into the restaurant? No, they bought into the restaurant. Now, that didn't end well.
Did not end well.
Let it match.
But they have now a partner, if you will, in the U.S., the most powerful entity in the world, the U.S. government. So how do we know what Intel's fate is going to be?
$80 billion in revenues 4 years ago to about, what is it now, $52 billion. I mean, they have.
You give them all the business now.
As you know, we've been in the greatest, maybe, tech bull market of anyone's careers, at least in the last 25 or 30 years. And the stock's down 75% over the last 5. This is a bailout. This is not a recognition of strength. This is not a growth company as the Norwegian sovereign wealth fund would buy. This is something very different.
Yeah, I tend to agree. It is a bailout. Now, trying to kind of part and parcel some of the positives and negatives here. So there's an argument to be made that the weighted average cost of capital might be actually lower. Counterbalancing that is that this is probably dilutive. And if the government comes in and we don't know ultimately what they're going to do, they may retrade this situation and they're coming in on the preferred level. I think that would actually give investors a lot more caution. And maybe this momentum that we're seeing to the upside might start to kind of wane. With that said, I think Dan makes a great point in terms of these being state-owned enterprises. I mean, this is essentially what this is. This, to me, screams of GM, screams of Lehman and Bear and things of that nature. So, again, I'm with the crew in terms of thinking that this really isn't a growth a growth story here. Now, in terms of national security, I can understand the argument there, and I think that's kind of like the logic behind an MP Materials. However, if you look at Intel's revenue line, 76% of their revenue last year was from international, and you really start to wonder whether or not that starts to cramp a little bit of this, and what's signaling that the government now owning a significant portion of this company kind of messages.
Because